Well, welcome everyone. Most of you will know this is David Morgan of themorganreport.com, and I've been looking at the crypto space for a very long time. We've been writing about in a premium service for a very long time. And one individual that I came across some time ago is Darren Moore. And Darren was, to me, one of the top people as far as ferreting out worthwhile news and how this space is developing. And I've followed him now for, I think, a few years. Had him on our mastermind series some time ago. I thought it was really worthwhile to bring him back into the public domain where a lot of people that follow the crypto space, whether they participate or not, people need to know where this blockchain is going. I've, again, talked about that in public and also written about it privately and publicly. So Darren, before I mess up who you are, what you are, and what your service is called, I'll just turn it over to you and let you explain that.
Hi, thanks for having me on the show, David. I appreciate your work and everything. It's I watch your channel often. My name's Darren Moore. I got into crypto a while back in early 2017. I've just kind of been studying it and posting my research on Twitter and on my group and everything, and just kind of show where the developments are happening. I do targeted keyword searches every day to try to find, what's happening in the crypto markets, and just trying to put that information out there. And then I have a YouTube show where I kind of go through some of the video footage of CBDCs, cryptocurrencies, and just technology in general to find out where everything's headed.
Great. That's a great summation. I just will reiterate a little bit. I mean, for me, time is critical for all of us, but it's probably the most succinct, worthwhile, fact-filled place for me to get educated or further educated or see developments in crypto. There's a lot out there that's philosophical and all that, and that's well and good, and I read some of it. But when you want the hard facts, what's really happening, especially what's happening, let's say behind the scenes, but stuff you have to ferret out that isn't that easy to find. Darren does a fantastic job. So Darren, it's going to sound like a bit of a Bitcoin bash, but anyone that's followed my work knows that I'm not against cryptos. I'm associated with the gold and silver backed blockchain effort, and I'm pretty proud of that. I want to talk about that later. But right now, one of the better known personalities, I'll say, in the crypto space on Twitter is the Crypto Whale. And I get his newsletter, and I'm not going to, I have license as a journalist. You want to put that hat on me to discuss some of this. I am not going to read the whole letter, but I thought it really started out really good, because what he talked about was the idealistic mission of decentralized money away from government. That's kind of what everybody believed, including me, although I was more skeptical than most when it came out. I thought, well, geez, that's awesome. Let's do it. But I wasn't so sure that they were doing that. And he goes on to say, unfortunately, Bitcoin and cryptocurrency more broadly have fallen a long way from its stated ideals. The rise of Bitcoin influencers immediately reflects upon this growing diversion. Many of these, he calls parasitic figures, peddle the same copy, naive libertarian nonsense that Bitcoin is the ultimate tool for achieving financial freedom. Fiat currency is a pyramid scheme. Bitcoin will make everyone disgustingly rich. So let's stop there. And I know kind of your view on Bitcoin. I want my audience, my followers, to hear from someone that's, I think, very grounded and understands the big space and the big picture. So Darren, what's your comment on that?
I mean, so if we look at Bitcoin, I mean, Bitcoin's definitely made traction, and the network's grown, and that's what I'm looking at for cryptos. I'm looking at the size of the network. So Bitcoin's network has grown. While I agree some of the points that the Bitcoin community is taking hold of, I don't necessarily agree with, right? It's like there's this narrative that Bitcoin is this freedom coin, and it's this libertarian type of decentralized money, which I agree that Bitcoin's decentralized, but the idea that it's some freedom coin, I don't necessarily agree with. If we look at just the KYC AML information in order to buy crypto, people know what your wallet address is, right? Like the regulators, if they really want to know what you're holding and your wallets and everything, they can look into all that. So I don't necessarily see Bitcoin as like a super type of freedom coin or anything like that. the crypto communities do get very speculative and push price predictions and kind of rile up the crowds and everything. So that's definitely happening. It's definitely happened in the past. But I do think there is some use to Bitcoin. I do think it's a decentralized protocol, and it does have good advantages to owning Bitcoin, right? Like if you look at some of the just being able to censor a transaction really can't happen on the Bitcoin network. You're able to, if you needed to leave the country or something, you could take your private keys, you could leave and still hold on to some of your wealth. But I think a lot of the Bitcoin community misses the point of crypto, right? It's because it's public money on the internet. It's anything of value. These are protocols of value on the web where you can host value in a decentralized manner and be able to audit and see everything that's happening on the ledger without anybody, interfering.
Yeah, let's expand that, because a lot of my viewers are not at the level that yours are. And so why don't you give me a couple examples? I mean, normally, like, let's say for a piece of property, be it raw land or real estate in the sense of a structure, be it single family home, apartment building, warehouse, whatever, you got to do a title search. You got to go through there and find out, who really owns this and are there any liens against this and all that type of thing. So use that as an example or a metaphor to what's different when you use the blockchain to do such a transaction.
Yeah, so some of these title insurance companies, right, they have to go through databases of like real files, like hard files that they have to dig through to find if there's liens or anything like that. When I worked in real estate, there was times where I wanted to purchase land from people and they couldn't clear title, so their land couldn't get sold. And if everything was on a distributed ledger, you'd be able to find the whole chain of title just by looking at whoever holds the token. So it would bypass all the labor that happens behind the scenes for a title company to actually prove title, and you're able to just purchase and sell titles instantaneously because all of that information is right into the ledger. You're able to see that in a public fashion. So I think that's one use case where it really shows an advantage over the legacy system, and not to mention, you can do other things when you have the title that's tokenized. Maybe you can lend it as collateral or sell fractions of it. If it's an apartment building and it was an income earning apartment building, you can fractionalize that NFT and have other people that own the apartment building with you, and the same thing happens when you sell it. Everybody gets paid that owns the token. So I think a lot of the innovation that's surrounding crypto goes ignored because there's a constant fight between what's better, gold or Bitcoin, or I think they're kind of missing a lot of the point of crypto.
Well said. Well, I want to get to that. I think that's probably our next topic. I am going to butcher this person's name, and forgive me, but it's Safadin's book called, quote unquote, The Bitcoin Standard. He pointed out in the year 1971 as the most critical juncture in modern history. He argues that, till he's red in the face, that the decision to separate ourselves from the gold standard in favor of fiat currency is the root of almost all modern ills. And then he gives an example in here, and I hope I'm quoting this correctly, where he talks about the music of the Renaissance, Bach, Mozart, Beethoven, versus what he calls the chirps and chatters and sounds of today. And I have my own opinion on that. You may or may not. But I want to go back to what you just said about, gold and Bitcoin. I mean, first of all, I'm not, I'm considered a gold or silver bug or both. That's fine. But really, I'm for honest money. I'm for honesty in the system. I'm basically for transparency. But before I go too far down my rabbit hole, I'd like to say that for me, Bitcoin is not gold 2.0. Gold in pure form is 24 karat. Bitcoin is 0 karat gold. There's really no correlation between the two if you're objective, at least, and I've studied it pretty hard. But what do you have to say about gold, Bitcoin, and the future of what I'll call blending the power of the blockchain with an asset-backed crypto using gold and silver. I know there's other ones we just discussed. You could have real estate, you could have cobalt, you could have wheat, you could have a lot of things. But primarily going back to classic money, I think holds a bright future. That's my opinion. Darren, what are your thoughts?
Yeah, so I mean, if you think about gold investors and their weariness to invest in SLV or GLD, it's because they're afraid that it's going to be manipulated. So if you owned a token, you can look on the on-chain analytics and figure out if somebody was trying to pump up the price or dump the price or whatever they're doing. You'll know who's accumulating it. And if there's a trusted counterparty, right, and you know that the gold's behind it, that's essentially not as good as gold, right? Because it's not in your hands, but the tokens are better than the alternatives right now. And not to mention, they pay the fees to store all the gold in the vaults too. So if you had 12 words to represent how many tokens you have, and you have a wallet, you don't have to pay for any of those fees. You don't have to worry about getting, somebody breaking into your house and stealing your gold or anything like that. Not to mention, things with automated market makers on decentralized exchanges. You might be able to earn a yield on your gold by lending it out to the automated market maker. So and also fees, right? So when I hold silver, right, I'll never sell it because I know the premium to sell it is super high. I'm just not willing to take that cut on it to day trade it, right? I could see the silver chart, and there's times where I think it's going to go down, but if I have the tokenized version of it, I can swap it and not have to worry about any of those really expensive fees. I'll pay a smaller fee. So I think that's a really good use case for precious metals, except for a lot of the precious metal community is kind of hesitant towards crypto. But I think if there's a counterparty that people could trust, right? There are mints that issue these tokens. There are some that are out there that are reputable. You just have to do the due diligence to find the right ones. And as far as Bitcoin, to compare it to gold, I think people are just comparing apples and oranges. It doesn't really make too much sense to me. If we had some type of hyperinflation type of environment, I think Bitcoin's going to go up, though. I do see Bitcoin going up if we have massive inflation or something like that. But the underlying value of gold versus the underlying value of Bitcoin is not something that I necessarily compare. When I'm looking at Bitcoin, I'm not invested in Bitcoin currently. I have in the past, but when I'm looking at Bitcoin, I look at how many wallets are being made on it, how many transactions are happening on the Bitcoin network. If the actual network is being used more, then that's something where I might want to consider getting into Bitcoin. But as far as just comparing it to gold I don't really see that. What I will say, if we were on some type of gold standard, right, and countries actually had to own physical gold, right, that's counterparty risk, right? So that's kind of where I could see Bitcoin coming into play. It's like there's no counterparty risk. It's on the Bitcoin ledger. So an army couldn't come in and seize your Bitcoin, right? It would have to be there'd have to be something physical. So I saw Switzerland was neutral for a long time, and now they kind of changed that and sanctioned. So, there needs to be some type of neutral counterparty just for that type of risk. But I think that risk is a low probability, although it's not zero.
Very good. I want to expand on that slightly. If you go back to the goldsmith days, people didn't want to carry around their gold. It was valuable. You could lose it. You could get robbed or whatever. So the goldsmiths gladly stored the gold and issued receipts for it. And as long as there's no cheating involved, it worked fine. And people used the convenience of the receipts to make purchases or make deals between each other. The thing about the blockchain is you don't have the ability to cheat. In the old goldsmith days, these goldsmiths realized that only maybe 10% of the receipts ever were turned in for physical gold. So they enriched themselves by printing up more receipts than it was gold to back it. Same thing that happened on the Bretton Woods agreement with the United States. $35 an ounce gold. Please give us these pieces of green paper. We will reimburse it at $35 set price. except the US printed up a lot more of those pieces of paper than gold that existed. So this history has gone on and on and on. And it's one of the main flaws of quote unquote a gold or bimetallic standard is it's not gold's fault, it's an inert element. It's not silver's fault, it's an element on the periodic table. It's the human influence. But with the blockchain, at least in theory, you can't do that. It's either there or it isn't. And I think one step further, it's a two-part question. I hope you don't mind, Darren, is that we at the Load Project, and I'm an ambassador and I'm biased. I have money, my own money involved in it and have for a long time. We're going to use the NFT to tag a certain exact piece of gold, silver, what have in our system. So like it's immutable. There it is, and it's only that. It's no more. You can't. The owner can do whatever they want with it. They could, borrow. As you said, you could. In some cases, you could put it into the I call the machine and come out with some interest on it, actually. But I don't want to give you 5 questions. So could you comment on the first 2, please?
Yeah, I mean, so if you have like this ecosystem that revolves around gold and tokenization, right? Things can get built, and there's constant demand for that token. Anytime that you have to send a tokenized gold, you have to pay a small amount of the underlying token. So, that the other part about fractional reserve lending, 10-to-1 lending is that's why I think as a crypto standard, just having crypto asset as the standard and it's deflationary, that same system will come about again, because there's a finite amount. So the banks would have to make money on it. So they'd start lending more than they actually have. And I think, the current crypto market has kind of done that. They've kind of financialized a lot of the crypto products. And I think that's the reason why the charts kind of look different, right? So usually Bitcoin has a blow up top, and this time, it's kind of been muted, as well as kind of stayed a little stable. Now, that's part of a maturing market. Some people will argue that that's actually, better. It's less volatility and everything, but I kind of disagree. I think just having the fractional reserve lending is a big problem. Being able to verify, like you said with the NFT, you could get even further. Like I know collectible gold coins, right? You can just mint one of them, and for certain that this token represents this gold coin that's stored in a vault somewhere. And you can really build out the use cases. And you gave lending, but there's all different types of things, right? You can incentivize. You could build a whole like YouTube that gets paid in fractional amounts of gold. You could just completely make a whole system that's gold based on the internet, and everyone that believes in gold can join the network and participate in it for gold.
I want to shift topics now, and this to me is where you shine. You shine throughout the sector. Very glad I found you, but for me, you really are good at putting together what the elites are saying about the crypto space. I mean, this is where I feel your service is the most valuable. So starting at the top, starting at today, it's shifted back and forth, and there's still debate regarding central bank digital currencies and how they're going to be implemented and when they're going to be implemented and how pervasive it will be. It will be worldwide, will it be countrywide? Are they going to be nationalistic, or are they going to be global? All of that. I know it's a big ball of wax to throw at you again, but you've handled them so far. Tell us where we stand from your perspective of studying so hard, what the banking elites, the bankers want to have happen, and how close to achieving it are they?
So central bank digital currencies are different in every jurisdiction, right? So for that purpose, there's also several different types of CBDCs. So there's retail, wholesale, synthetic, and there's different use cases around them. While some countries are moving to a central bank digital currency, China is an example. There's some smaller countries that are also moving to just whole central bank digital currencies. In the U.S., I think it's more likely that we don't see a CBDC anytime soon. I'm not saying never, but I'm saying, sometime in the distant future versus what's going to happen in the shorter term. On the shorter term, I could see the U.S. backing some stable coins, and whatever stable coins are dominant on some of these crypto networks that incumbents have built platforms for, can use central bank money on those platforms through a stable coin or a synthetic CBDC, which basically means that like this Palau just recently put dollars on the XRP ledger, and that's their central bank digital currency. So just an IOU by the government of Palau on the XRP ledger. So that's happening all across the globe. What happens in the shorter term, what happens in the longer term are kind of different. But Mark Carney was one of the people that talked about a synthetic hegemonic currency. So a lot of what we're talking about with just the innovation that revolves around crypto is going to be brought to monetary policy, right? If you think about just how monetary policy works, if they can get to a granular surgical level of monetary policy, that's what they want. They want to be able to control the economy as they see fit, right? And be able to move different sectors of the markets if they need to. And right now, it's kind of like a sledgehammer approach. They just print up a bunch of money and it just pumps up all the markets and trickles down from there. But if they were able to target certain monetary policy, that would be the goal of that. But that doesn't necessarily mean like a retail CBDC. That could be done with a wholesale CBDC, and just kind of open it up. But I think it's going to take a little while to get to that level. But that's what's happening behind the scenes. That's what they're trying to do. And the synthetic hegemonic currency is this was a UK central bank governor at Jackson Hole in the U.S. telling us that they were going to dethrone the dollar with the synthetic hegemonic currency. At one point, we need to lower dollar dominance. And I mean, I don't necessarily think that the U.S. even wants dollar dominance anymore. If you look at the DXY chart, it's skyrocketing, and it's going to cause a global depression that they don't really want. It's just because they're trying to control CPI. And it gets really sticky when you have the reserve currency. A lot of these problems exist. So if you can bypass a lot of these problems with digital currencies as well as crypto assets, I think that's the more likely scenario. Although the longer term, it's probably going to be all CBDCs, but shorter term, I think they're going to bandage up the cracks of the system with digital currencies and crypto assets.
I've written pretty extensively about Mark Carney and his speeches at Davos, the UN, and at Jackson, Wyoming with the Fed. But moving on, I want you to unpack a couple things for us, Darren. And one is, tell us the difference between wholesale and retail CBDCs. And also, after that's accomplished, could you go into synthetics and what that is?
Okay, so retail would be like a cash equivalent, right? So, like Alipay, when you go into a store and you pay for something through your cell phone, and you're just handing over central bank digital currency to the store clerk. So it'd just be for everybody, for us. While wholesale would be more on the back end. So the large banks that have a Fed line now get a wholesale token, and it's just kind of like tokenized reserves on the back end. Then synthetic would be issuing assets right on a crypto network. So I gave the example of Palau, but just any country or any central bank that puts an asset directly onto the ledger, that's synthetic CBDC.
I'm going to give you a question I get all the time in the precious metals, and of course this will be in the crypto space, and it's impossible to answer because no one knows. Everyone wants to know when, but we know, I know from your work and others that, the central banks have looked at this harder and harder, and some are implemented. I mean, China's pretty well established in the CBDCs, but others are not. Where do you see it getting, let's say, that tipping point, that point where more than 50%, let's say, of the transactions are taking place over a CBDC versus the current system that we're moving that direction?
It's difficult to determine, but what you find out with technology is that it moves really quick, right? So I think I think these projects that our incumbents are involved with, when you start seeing those go live, which comes with regulations, right? So that's an important key factor of this. A lot of the banks can't touch a lot of this stuff and start getting their hands dirty with it. They can test it, they can run pilots and things to that nature, but to actually utilize, I think the U.S. needs to have regulations for crypto, as well as like tax and everything else. And what happens if you're a bank in England or something like that, and you were to move forward without the U.S., somebody would come to your bank in the U.S. and maybe fine you or shut you down or something. So I think the rest of the world's waiting for the U.S. for regulations. And when we see that moment in time, I think you're going to see a lot of these traditional assets get tokenized. I think that's where you're going to start seeing real estate and stocks, equities being tokenized, as well as bonds and everything else. And I think that's where you're going to see more leaning into it, and then it's going to happen really quick, right? When this picks up critical mass, and we're talking about real estate before. This is kind of off topic, but equities, right? Just DTCC owns everybody's stock certificates. There's once a time where you had a stock certificate, but you had tokenized stocks. You could pledge that as collateral. You could lend it. You could do everything that tokenization offers, and it's not in DTCC's custody. Not to mention how much money DTCC is probably spending to keep all their databases secure, right? So these ledgers are proven to be more secure out in the open, right? So just the cost of these traditional systems versus the cost of these distributed systems are much better. So I think that's going to be a big point of moving forward.
Very insightful. So I don't like to just bring out different cryptos, but I will, because I think it's critical. I was interviewed by Stansberry Research not that long ago, basically on the Ukraine war, but these touch many vectors, and there's a lot of subsets to anything at that scale. I mentioned, and I got it from you, but not you saying it. It wasn't Darren Moore saying it. It was you posting an article that said it. So I'm not, I want to make sure this is clear. But it mentioned the possibility of using XRP and maybe being able to speed up a CBDC or something like that. So I'd like another two-part question. You could comment on that, but I'd really like to know is, where do you see XRP relative to these other cryptos? It seems to me, and this is just my opinion, but I want yours. Bitcoin was the big daddy. Everybody knows it. Everybody knows the word. They might not understand it, or I think they do. Perhaps they don't. But that's, it's in first place. I give XRP second place. I mean, for what I've seen on the internet, I don't have a lot of time to look at every YouTuber that's a XRP maximalist, but there's several out there. So I want a more steady state view that you studied, and you're pretty objective. At least I see you that way from all that you've done. Give us your rundown.
Okay, so first I want to say that I'm invested in XRP, so my opinion is probably biased, but if we look at just like correspondent banking over the last 10 years, it's in its complete decline while payment volumes are going up at the same time. So correspondent banking is how the banks actually move money across borders. And that's in a decline, and it's not so much because they don't want the business. It's because they're getting fined by regulators. They're having low liquidity in some jurisdictions. If you're a correspondent bank, in Turkish lira and dollars, right, and the lira popped up 80% or so, you took a big loss on that. So they factor all of that into your cost when you send money across borders. So I think that trend is very important to XRP holders, and I think that's eventually going to matter a great deal. It's probably going to matter in a lot of these smaller countries first before it starts working its way to G7 countries. But that's what Ripple is doing behind the scenes, is they're building up liquidity in these smaller jurisdictions. They're building up, pairs against XRP for remittances. And, they're able to bypass this correspondent legacy system right now. and I think that's important part of it. Not to mention, I see ODL is gaining adoption. They said that they're up 6x in volume, and I know that's true because there's a guy on Twitter, I'll give him a shout out, Short the FOMO, is XRP on-chain analytics. He has a website where you can see all of the transactions on the XRP ledger in real time, as well as ODL and everything. And the on-chain analytics are picking up. As far as central bank digital currencies with the XRP ledger, Palau was one example of that. Bhutan was one example of that. The XRP ledger is probably going to adopt something called federated sidechains. So what that would mean is you could build your whole CBDC. So it's the Morgan CBDC that just connects to the XRP ledger. And if you could do everything domestically, you could set up your whole payment system for everybody that lives in the country of Morgan. And when you need to make a cross-border payment, it could connect to the XRP ledger and then convert any of your currency for XRP to my currency, right? So, there's all these different walled gardens of CBDCs that can connect to the XRP ledger. In the shorter term, I watched a conference with James Wallace, which was he's the head of CBDC design for Ripple, and he was saying a major EU bank and a major American bank were talking about issuing stable coins on the XRP ledger. So that goes into why I think regulations are key, because I think a lot of these banks are going to issue their own currencies right onto these ledgers. And then once you have bank money where everybody's satisfied that there's well, I don't know why, but everyone would be satisfied and confident that these dollars are backed by this bank, and you'll get your money if anything were to happen, and everything like that comes along with that. So I hope that answered your question. But
yeah, very good. I'm going to push back. It's not on you. It's not personal, but I've taken a hit, and it's pretty obvious if you do any modicum of research that some of the major banks, I won't name the big R word, are involved with Ripple. And of course, that could be a moral objection or something. And I get it. That's why I tell my members, look, I try to be objective on these things. I see it as an opportunity to profit. I don't see it necessarily as my favorite crypto based on who's behind it. Do you have any comments on like the Rothschilds being involved with XRP, and does that make any difference to you?
Yeah, I mean, I always get people in the comments telling me I'm selling my soul, and I hear all types of criticisms about it. But I'm not going to change the world. It's just the way the world is. I might as well look to see what advantages I could have in order to help my family out. So that's my main thing. Is I'm not going to fight the powers that be. This is what it is. I'm just going to try to use this information to the best of my ability to help my family out. And I mean, the Edmund D. Rothschild Fund invested in SBI Ripple because they were holding XRP. So that's another reason the regulations matter, right? Is because the investments can't necessarily go into crypto directly. So they have to have kind of invest in companies surrounding crypto or banks surrounding crypto. But I out of every crypto asset, that there's probably 20 of them that have these strong relationships, but in my opinion, Ripple has the strongest ones. I mean, if you look at some of the board members of Ripple, Michael Barr was a Ripple board member, and he was just in front of Congress to fit into the Fed governor position. You look at Anna Manuel, that was also that's like setting up China policy with Condoleezza Rice, part of her firm. There's just connections all over the place, and it's not necessarily like that's not common in crypto. Usually in crypto you have something a little bit different. It's more about the ideals of decentralization and just kind of pushing for the whole decentralization for the people money, while you have all these big players involved with Ripple. Rosie Rios, she signed the $100 bill. If you look at the $100 bill, Ripple board member signed that. So it's to me it's like I don't know, I'll take my chances that something like this happens. And the way I kind of see this is like how the NSA partnered with Google. You know, it's like big government partnering with big tech, and that's kind of the thing that works out in the long run. So that's the way I see everything happening.
Excellent. Well, we could go on and on. We've been, I think, 30, 40 minutes. I'm going to thank you publicly. Before we sign off, I want everyone to know how they can find out more about you, your work, how they can join your Patreon. And after that, if you want to come back to the PS, postscript, if there's anything I haven't asked you or a point you want to reemphasize, please do so. And we're going to sign off. Thank you, Darren. I appreciate your time.
Thanks, David. I appreciate you having me on. It's been a pleasure. If anyone wants to find me, just type in Darren Moore Jr. on YouTube or patreon.com/fame21more. That's also my Twitter handle as well. So.
And if there any postscript, anything you'd like to end with that you want to emphasize, or?
Yeah, I mean, these different use cases, you know, like going back to the beginning of this, where we're talking about, you know, looking at crypto as an asset versus a protocol. I think that the mindset that crypto investors need to have is more about the network, more about the protocol, and some of these problems that we're seeing, like recently with baby formula. I did an interview with a company that was working for supply chains, and what their goal was is, you know, you're able to track the bad baby formula right back to the actual machine that made it. So instead of shutting the whole factory down, they could have just shut down the one machine that had the contaminant, and that was it. So, you know, the real economic value behind crypto is just like that, you know, just getting into these granular levels of detail and being able to make the system more efficient. You know, that's what I see with crypto. I don't see it as, you know, fighting Bitcoin versus gold, although you probably would get a lot more clicks if we debated Bitcoin versus gold this whole show.
I really think that's a great place to end it, Darren. I'm sure I'm going to have you back. Worth every minute. Thank you so much. I'll sign out here.
Thanks, David. Appreciate you having me on.